Welcome to today's webinar. So today, as you can see on the screen, we're focusing on the playbook for providing virtual CFO services to clients. We've had other sessions where we talk about CFO services and really drilled into parts, and we'll do some of that today, but today is really focused on action and what would that playbook be for virtual CFO services. A couple of administrative things. My name is Tom Wadelton. I am one of the full-time CFOs working for Summit CPA Group, providing virtual CFO services. I'm also active with the Indiana CPA Society and also the AICPA. And these are topics that are talked about pretty frequently about how do we revolutionize what is being done within accounting. A couple administrative things. So today qualifies for 1 CPE credit. You do have to attend the entire 50-minute session, and we will have 3 polling questions that you need to answer. If you do those, we'll send out the CPE certificates within the next week. We'll also send out webinar slides, everything like that. One other point, we'd really like people to use the question feature in the webinar. I monitor those, and we'll try to answer as many of those questions as we can during today's session. So we're really looking forward to it. Let me introduce you quickly to Summit CPA Group and then also our 2 speakers for today. So Summit started in 2004. We do provide CFO and back office accounting services to clients. 7 years ago, we became a fully distributed firm and found the freedom of having employees and clients where location didn't matter. And that's true. Our employees and clients are all over the country, including many outside the US. We do have more than 130 virtual CFO clients. And you can see since 2017, an average of over $61,000 worth of annual revenue from those clients. And a little bit more recent stats are below there. So this year, that's been $67,000 with a 44% sales closing rate. So we've been able to add $2 million worth of revenue this year and currently have more than 55 employees. So you can see our 2 speakers. Jody Grunden is the CEO and co-founder. Jody, also congratulations. Jody was named by CPA.com to be the Innovative Practitioner of the Year that's going to be awarded the DCPA conference. So congratulations on that. That's really cool.
Yeah, thank you. Appreciate it.
Adam is also a co-founder of the firm, and he's our chief operating officer. So Adam really makes sure our processes and people and everything work well within the firm. So Adam, welcome. I will also mention that Jody has a second book, Building the Virtual CFO Firm in the Cloud, that is out and available through CPA Trendlines. So a lot of information we're sharing here that I think is really good. The book can give even more information about that, and you can really drill into some individual topics. So another thing for people to look forward to in there. Okay, so jumping into some of the topics that we're covering today, our learning objectives. So we do want people to get a better understanding of the role of the virtual CFO and what value it provides to clients. How would people present virtual CFOs to prospective clients? The sales is an important step in that. Understanding what does profit-focused accounting mean, getting clarity around kind of the how and why you should define your niche and what kind of clients that you're wanting to tailor to. And then also how do you provide, how the proven approach of client meetings, agenda, and cadence. Hopefully you're seeing in a lot of that, and I'm going to launch the first poll question as I get into what we're going to cover today. Hopefully what you're seeing within a lot of that is that playbook that I had mentioned. So what is it that you really need to do, kind of what are those actions? And to go ahead and cover the agenda of things, we're going to go through the role of the virtual CFO, how to get started doing that, and then how to deliver virtual CFO services. So Adam, if you want to go ahead and jump in and start in on the topic of the role of the virtual CFO, and then in probably a minute or so, I'm going to jump back to the slides and close down the poll.
Yeah, I mean, I guess, just to kind of get started on the role of the CFO, for us, it's a little bit different. Whenever we talk about VCFO, I know there's a lot of different vernacular out there. A lot of people talk about fractional CFOs, part-time CFOs. So we've heard a lot of that over the years, and what we've done is, from our perspective, is cultivated what it means for us to be a VCFO. So it's intentional that we're always going to be virtual. We're not going on site with clients. It doesn't mean that we won't see them whenever we go to different cities or whatever, wouldn't have lunch with them, but that's not part of our delivery. So the virtual is a key component of that. But the other thing is like whenever we talk about part-time or fractional CFOs, a lot of times they're not, they're not kind of a permanent fixture with their clients. And for us, that is a key component. So as we talk about here, the role really needs to be, of course, you're going to be the coach. and when needed, you're going to advise the client, which, I mean, I know that sounds like permission to play, but for a lot of us, we sit back and we let the information kind of tell the story a little bit, and then we let the clients ask us questions. And whenever we're working with our CFOs and our team, we're like, no, you should be the chief architect. So design the information in a way that you can tell the story, first of all, and then make that story really concise and short. There's no reason to be on a call for an hour talking through a bunch of data or showing them all the cool reports you put together. I know we spend a lot of time on that, and we need that in order to be able to tell the story, but the client doesn't really want to sniff through all that stuff. So what we do is we'll put that together, we'll come up with some highlights, we'll point those things out, and then as the client needs to drill in a little bit deeper, we'll go ahead and we'll pull up certain things and show them whatever the highlight of the month is or whatever we're talking about. So we're also coaching them along the way on what they should be looking at and what they should be focusing on. And then of course the advisory part is, don't be afraid to say, hey, if it was me and I'm in your position, because that's really what they want to know whenever they're talking to us, this is what I would do. And again, it's kind of a foreign concept to a lot of people in finance, because it's like, well, it's your money, it's your decision. I'm just showing you the numbers. Not in this role to us. We're really trying to be that partner and clarify direction for our clients. So that's what we mean, just whenever it starts as the foundational relationship between us and our clients. And as I touched on earlier, this is more of an evergreen solution. It doesn't come with an expiration date. So many times whenever they'll say, well, when do I need to hire a full-time CFO? Or I just need you for this one thing. That's not how we approach our engagements. So whenever we try to, we have the ability to replace the entire finance department if they need to. And if nothing else, just oversee it, because we do everything with a 2-person team. We have a senior accountant that's client facing as well as the CFO, but our intent is to be there forever. We can scale and grow with you. If you need additional services, whether it's for a part-time period or for the long haul, we can kind of ebb and flow with the business as it needs more things, or maybe their internal accounting team goes on maternity leave or whatever. We can step in and fill that void, but we can do that because we're constantly there. And we're there for the long haul. And that really comes to light whenever they do have things that happen that are challenges, like the COVID crisis, or if the economy, they lose a big customer, whatever it is. Because we've been along the ride for so long, we're able to help them kind of navigate those paths. So that's important as well. And a little bit different than whenever you think about, fractional or part-time via, CFO services.
Adam, is it fair that we've had clients who've come and said, I think I just need someone for a short time, and then they end up staying the evergreen solution?
Yeah,
right?
Yeah, absolutely. But I mean, for the most part, whenever we're in our sales call, we tell people, we're pretty upfront. If they're just looking for somebody to come in and, be that sniper and take out that specific problem, we can certainly help with that, but it's a more holistic approach. And so we're probably not the best fit. And when we explain how we work and how we do it, and they realize, well, you know what, if I was to hire that one person to try to handle that situation, they're probably going to charge me the same thing that you're going to charge for the entire year. And now I've got a partner to run alongside me. So a lot of the times it ends up, that might be the reason why they first try to engage with us. But as we explain that process, they're like, no, that's actually what I probably really need, and I wish I already had. So we push people away from that, right at the very beginning, right in the, the first sales call.
Yep.
And so, but that's a great point. And, another thing is we focus on, profits of the business. So we do taxes. We're a CPA firm. I know for a lot of people that are entering into this, the lead in is through tax planning and tax preparation services. That's a great lead. That's where you start the relationship many times. But, we joke with our clients right away. We're like, hey, our goal is to make you pay a lot of tax. That's your number one KPI. And they're just like, what? Like, never heard my tax person tell me I want to pay a bunch of tax. And it's like, well, we're here to help you make money and make a lot of it. And so we're going to help you fine tune things. And at the end of the day, we're going to be as efficient as possible with your tax planning. We're going to be along the going to be doing all the things, we don't have to come with a silver bullet from a tax perspective, because we're going to be making tweaks as we go. So it's going to be efficient, but at the same time, at the end of the day, you're going to make a lot of money that's our intent, that's our focus. And clients usually can appreciate that and understand that sounds like a good problem. So profit-focused accounting is kind of key to our delivery and what we found to be beneficial.
Yep. Adam, one quick question around the evergreen as we go to the next slide. Octavia is asking about clients. Do they renew their agreements, or is it a continuing agreement that we have with them?
No, it's a great question, and we actually just went through peer review, and that was something that we always ask as we go through peer review. Do we need to update our engagement letters? So the answer was no, we don't. So whenever we have a client sign those, they're just assumed to be perpetual. The only time whenever we'll go in and revise our engagement letter is if they've changed a level of service. They've decided, hey, we're not going to do, we're going to get rid of our bookkeeper, we want to add tax or whatever. Only time whenever we'll go in and update that.
Okay, good.
Yeah, so on the profit-focused accounting, I apologize in advance. I'm going to read to you, but it's really important because this is again kind of the cornerstone of what we deliver and at the heart of the delivery of the VCFO service. So profit-focused accounting is a system that's designed to help a client accomplish their financial goals by breaking down their revenue into non-financial drivers. So just real quick, again, we're talking about a more dynamic forecast. We're not just talking about year-over-year growth. Unlike revenue numbers, non-financial drivers can be consistently controlled and monitored through clear metrics that are then used to determine a client's revenue forecast. Finally, the amount of expected revenue in the client's pipeline is used to inform and adjust the forecast. So big picture, again, what we're talking about is making a dynamic forecast that the client can digest and understand and be a part of. So rather than just using big numbers like we're going to do $300,000 this month, we're asking the client to help us break down, how do you make money? Who are your customers? Who delivers the sales? Those kind of things, so we can figure out the direct and indirect costs. What are the non-financial things that get you across the finish line? I got to do so many of these or so many of those. And whenever we're building out the forecast, that's how we're building out all of our revenue assumptions. So the client can say, oh, okay, I understand that. I need 9 of these and 15 of these and 6 of those, and I'll have a good month. Is that what you're telling me? That's something actionable that they can take to their sales team or they can drive. And so whenever we get done with the results, we can plug that in and say, well, this is why we missed. We missed only in this one part. We did good here, but it wasn't enough to make up over here. So it really becomes, it's almost like gravity. The client just figures out a way to become better because of this insight. And then more importantly, not only do we want to talk to them about, hey, this is what you should be doing so that they're looking forward just a little bit, but now we can take the pipeline. And we'll talk through different types of pipeline, but you can take the pipeline and plug that into your forecast and kind of see where their deltas are. And, hey, where are we going to be and what does that mean to the bottom line if we're not going to be able to hit that? So it's an important conversation that will fuel almost your entire delivery by itself.
Yeah, and I think, Adam, I think we can't stress that even more. It's the conversation's not, hey, let's increase revenue by 10%, because again, a client can't control a percentage like that. But they can control. Let's bring in 3 more vehicles if it's an auto repair shop. Let's do for a doctor, let's see this many more patients. They can control that, and so when the conversation isn't necessarily, hey, you missed your dollar market, which we do talk about, but it's more like, hey, and the reason why is because you only brought in 5 vehicles this month versus 7, that type of thing. So the idea is making it relatable to the client so they can control those factors and then provide them with the KPIs so they can manage that. And the KPIs, again, non-financial.
So Adam's covering just these 4 parts that we go through, right? The main facets that we cover for their finances.
Yeah, so in whenever we're talking about profit-focused accounting, these are the 4 kind of pillars, if you will, of what we're talking about. So we talk about cash flow, both short-term and long-term cash flow, 2 totally different concepts, 2 totally different tools that we use for both of those. This is a big part of our sales process and education process with our clients to kind of separate, again, long-term cash flow planning from short-term. And Jody will dive into those just a little bit. The forecast, as we mentioned, is a key component that really it really is the heart of the conversation, and it brings purpose and meaning and a sense of being deliberate to the financials. And then on the pipeline side, again, this is where we can look and help them with a little bit more insight into the future, and they can kind of say, okay, this stuff that I think is going on, because we've probably all been in those conversations with clients whenever they tell you, oh, I've got this going on and I've got this going on. It's like, okay, well, let's see how that plays out against what we're supposed to be doing. Oh, it's not enough, and it's like, what do you know? So there, the client enjoys having those conversations, but being able to kind of, plug it into what you're supposed to be doing, it provides a lot of context. And then finally, the financials. Of course, this is super important. This is the part that most of us already do, but there's a way to have this conversation where it's a little bit more collaborative rather than just reading numbers. I mean, people get bored really quick and they'll glaze over. And so it's really important just to spend a bunch of time in advance coming up with the highlights and spending 10, 15 minutes on the financial presentation itself so that you can talk about why things turned out the way they did rather than how they actually did.
So Jody, how do you get all this started?
Well, this is actually my favorite part on the marketing side. So with the way that we've done things from the very beginning, we've tried many different solutions on bringing clients in, from direct marketing back when we had the fax machine. We faxed clients, prospective clients. We promoted, to banks, went into banks and did presentations for clients. We did a ton of different things. And once we actually, started, doing things, that the idea was we had to create service levels. So in the marketing there itself, we had to create service levels that the client could pick and choose from, which is really important. So it wasn't a one-all solution, which is what we had at the very beginning. It became, a tiered solution. Hey, do we want the premier package, the virtual CFO service? Do we want something a little bit lighter? We called it the controller service. Or do you just want something that a typical accountant would provide already, which is just historical financial statements with maybe some consultation involved? And we called that our transactional. So we identified 3 areas. And as you go through your practice and identify those areas, you can call them whatever you want: bronze, gold, silver. It doesn't make any difference. 1, 2, 3, and you can create whatever context you want in each of those different areas. So it's important that you do that in advance and then create the scope around it. Because with our scope, it's important to notice that our top level service, our virtual CFO service, is what we base our subscription-based billing model around, is unlimited. So unlimited in the fact that, we will meet with them on a weekly basis. We will go through a pipeline. We'll go through, everything with them. We'll do a profit sharing plan with them. We'll help them through a buy sell agreement. We'll help them through, selling their company. If they've got quarters out there looking to sell, we'll do everything that a virtual CFO would do at the agreed upon price, and that's key. And with the subscription-based billing, in that the key there is that you understand the frequency that you're contacting, the frequency you're meeting with a client. Are you meeting with them monthly? Are you meeting with them weekly? Or meeting with them, I hope not, but maybe you're meeting with them quarterly. We don't do that anymore. We with them either monthly or weekly, and it's about a 50-50 split between our clients. Depending upon, we pick up about 30 new clients a year, so depending upon the switch there, goes between 52% to 48% back and forth between a monthly look and a weekly look. And a lot of that really depends on the size of the client. So again, the size of a client we typically work with are over $1 million. So we look at a $1 million client as a prospective, what we call our controllership, or once a month. Once they get to about the $1.5 million to $2 million, then we start bumping them up to our higher level, which is more of our weekly meeting, because now they're developing a team underneath them. And so as we go into what we call our leadership team meetings, where we have the client and a couple of our folks on the team, usually they're going to have 2 or 3 people in that meeting, and it's more of a leadership, and that usually happens, closer to the $2 million mark. But with the clients, we don't, we're not limited on how high we go. I think our biggest client's about 30 million. The average CFO client is between 4 to 5 million. So it kind of gives you an idea where our client base is. We try to stay away from the clients below $1 million unless they've got a lot of capital. Maybe they've got a lot of venture capital, and they're coming on because they're going to really blow up and they need somebody to help them, and blow up, and hopefully in a good term, blow up in a going up term. And but they need somebody help, or if it's just a high growth stage where they've grown from $500,000 to maybe $750,000, and they're trending very high to where they're going to be there. But what we don't want to do is we don't want to be their highest cost. and because that type of client's looking for that silver bullet every single engagement, every single time we talk to them, we're not going to be able to provide that, because nor would a CFO if they're working on staff. They're not going to be able to provide that silver bullet every day type of thing. So it's important to identify frequency. It's important to identify the scope and make sure it's very clear to the client, very clear to the team members, because with us we're not the CFO on all the clients we work with. We have a team of CFOs, and so we have to make sure that that's conveyed down. Here's the scope of the engagement, and it's perpetual in nature, meaning it goes on forever, like Adam mentioned. So the client can cancel anytime. We don't have a year contract or a 6-month contract or anything like that. The way we look at it, if we can't perform, then they shouldn't have to pay for it, and that's kind of the high standard that we hold our team up to. That's why our team gets rated every single month by our clients and how well they're doing, red, yellow, green. Clients get a quick email, they rank the team, and that's really important to the CFOs. When they get a yellow ranking or a red ranking, which doesn't happen very often, it does happen, but does not happen very often, they take it pretty much to heart, and they fix the issue right away. So again, it gives that idea, that collaborative idea with the client. And then kind of backing up to the very first one there, identifying the type of client is important. We've already identified size of the client. Now kind of going to the next slide there, do we identify the niche that the client's in? Is the client in a specific area or a specific niche? For us, we started off and we are primarily working with creative agencies. That would be like SEO, SEM, design shops, development shops, web design, content, all those type of things. We decided that's what we wanted our primary niche to be. Now with you, it could be cardiologists, it could be repair shops, it could be hairdressers, it could be beer companies, it could be really whatever you want that niche to be, what you have that most passion with, and then you focus on that. Now, does that mean that we turn away the random company that calls us because they heard how great a virtual CFO service we provide? No, we don't do that, but we focus strictly on the niche. We have about 130 clients. Like I said, we average about adding another 30 clients a year, and we have a pretty high retention rate. It's about 96% retention rate. So we maintain, or we keep the majority of those clients year. And with that, I would say probably out of the 130, we probably have 40 of them that have nothing to creative agencies, and that's the niche that we're actually marketing towards. So again, clients come to us for various reasons, through referrals, through website, through speaking engagements, because we try to position ourselves in the market as a thought leadership. So we don't do any outbound marketing. Everything is coming inbound to us. So that's the key that we found. So we're not email blasting clients. We're not going out and chamber of commerce meetings. We're not marketing the partners of the firm. We're marketing the firm itself, and that's the big differentiator between what a traditional CPA firm is going to do versus what we're going to do. Now, did we start that way? No, we didn't. We went out there to the chamber of commerce meetings. We did all that kind of stuff, all the BNI or whatever those meetings were, the lead sharing meetings, just to get generating new clients, getting things started. We took actually, our first clients, that we had as tax clients, and converted those to, monthly clients at that point. But so the key there is you just have to make sure that you don't limit yourself with your niche, but really focus on that niche and really start branding your website towards it. And when we talk about positioning is one of the key areas that you can do as a firm. And when I say that, positioning is, you've got to become that thought leader, which is important. So how do you become a thought leader? Well, you write a book, you write articles daily, you do all the different, and I say daily, and I do mean daily. We've had a blog article daily since probably 2007. So it's been a daily article going out every single month. And of course, I don't write them all. Adam doesn't write them all. Tom doesn't write them all. We hire people to do that, and that's important. There's a lot of subcontractors out there that will help you write articles. You obviously would like to make sure you proof them, look them over, making sure that they're the message that you want to convey. But it's important to get that out there so that people look at you and they Google, CPA firm or CFO, beer industry, boom, you pop up on the organic search, search list there. So that's the real important thing there. And then be at the conferences for the clients. Again, that's positioning, 101. be at conferences, speak to your audience, show them how to be profitable. Do not run a sales pitch. That's extremely a no-no when it comes to positioning. You want to become the thought leader. You want to become the educator. You want to be that person teaching clients how to be profitable, how to run their business, how to make money. There's a lot of different topics you can talk about. How to work cash flow, but how to work cash flow in the creative agency, in the cardiology area, in whatever area that you might have. And so contacting different agencies that do like peer groups, where maybe the owners of agencies are there, owners of doctor groups that you can pop in and give a 30-minute talk about how to be profitable. Again, positioning yourself, becoming that thought leader is extremely, extremely important. And that's going to really help you to basically add to the bottom line, because the more that you're positioned, the more that you're niched, the more money, let's face it, the more money you can charge for it. And with that, that's why our average client dollar amount has gone up year over year over year, and it's now approaching $70,000 as an average fee that we charge a client over a year time, and 45% closing ratio is pretty unreal, because again, they've qualified us way before they've made the call. They found out about us through our website. They've seen articles written about us. They've all the different areas that we've positioned ourselves. They've made that qualification, and a great closing ratio is between 20 to 30%. If we're at 45%, that kind of tells you the positioning and the research the clients have done or prospects have done before even contacting us, and that's really important, because you're not going to get that by going out and knocking on doors and trying to talk somebody into a virtual CFO service. It just doesn't happen, or it doesn't happen at a very high pace. You'll probably strike out 9 out of 10 times doing it. So you've got to really position yourself, starting with your existing clients and kind of moving out into the world of becoming that. Again, that thought leader is key to success.
Yeah. Jody, you commented on the amount that clients pay, the $70,000, $60,000 a year. That helps with the question from Nevin, where he said, so basically this isn't going to work for clients less than $1 million. I think it's a chance. I could reinforce a couple points you made. The
Sure.
Smaller clients, this could be their biggest expense item if they're less than $1 million in revenue. That's probably more than what they can handle in doing that. And so being clear on that piece, also, I'm impressed that on our website, we've got some of the criteria for clients that people who would look can say, okay, that they're probably not providing the service for me, and they don't end up getting into our sales channel. So as you talked about niche and the kind of clients, that's really important to be clear, because you can avoid wasting their time and our time looking for those kinds of clients.
Yeah, that's a great point. And when I say average, we do have clients that will bring aboard that only pay us $30,000 a year, and then we have those clients that pay us $120,000 a year. So the $60,000 to $70,000 is just typically an average. And the one thing we want to make sure that we did do is we wanted to scale our fees based on the size of the client, which I thought was extremely important. We didn't do it right away, and had we done that, we'd probably have 30, 40 more clients for sure. But scaling was really important, because it really turned a flat fee engagement into a value-based billing engagement. Because again, the more we scale based on two factors: one, the number of people that they've got, number of employees that they've got, and then the other one is the revenue size. And so we're going to charge a $500,000 client a lot different dollar amount than we're going to charge a $10 million client. And we make sure that we're very, very transparent to the client, so they can see exactly how we price and exactly how we scale, and allow the client to really pick their own adventure. Do they want us to do cash flow management? Click the box. Yep, they do. And here's what the fee is going to be. Do they want us to do tax planning? Do they want us to do credit card expense reimbursements? Do they want us to pay their bills for them? Do they want us to do their invoicing? Do they want us to do some of that back office stuff? We find about 30% of our clients have us do back office stuff. 90% of our clients have us do, virtual CFO or shipping. Again, we got that 10% to do the transactional side. So again, it's important to identify, like I mentioned earlier, identify the different levels. And then once you've identified the different levels, make sure that the scope is very clear to the client, but give them the option, because there's very, very few clients that are identical in what they have to offer. We give them a variety of things. Maybe some of them don't even want us to do taxes, and that's perfectly fine. We let them know, great, we work well with others. So we'll work well with their tax provider, not a big deal. And we find that 75% of the clients do want us, and we actually add 5 to 10% more once we've actually started the engagement, because they see how things are flowing and they see the importance of it. So really important that we go through, when we go through the basically the sales conversion process, that's got to be that's really starting your relationship with the client, and it's starting things off and how transparent you are. And so when we've developed a 6-stage process here, basically what we're doing is everything is truly automated. So they're coming to our website, they're filling out, we're getting their lead information. Once they've done that, they actually go onto our calendar and schedule time. So we give them access to our calendars, and so they schedule time, through Calendly, and with that, boom, something pops up on Adam's calendar, or something pops up on my calendar, or Tom's calendar, and then that basically that starts the event going there. And then with that, we have a 1-hour Zoom meeting with them, and that's it. No more than 1 hour. And with that, during that meeting, we're listening to why they came to us. What was the reasons for? Are we looking to replace somebody? Are we looking to add to their current team? What are their pain points, and what do we have to solve for? So during that half an hour, it's just basically the first half an hour just simply listening, and then the second half an hour creating their proposal form right in front of their eyes so they can see it. So by the time they leave there, they know exactly what the fee for the service that they ask for, is going to be. And we give them, we'll give them variations of that, so they can say, hey, if you want to add this or subtract this, or maybe, hey, your fee increase. Let's say maybe you have a great year and it increases next year. They can say, hey, here's your new fee. Here's what your new fee is going to be next year. So they can see all that information during that process. And so it's basically a listening and then helping out. And determined and selected the package for the client. We've got everything taken care of, and we've agreed upon it. We go through the next step, which is the engagement letter and SOW. And typically, I would say, yeah, go ahead. Yeah,
sorry.
Sure.
We've got a couple questions around pricing. One, you just got to me talk about the service package. So Sheila's asking, so if a client doesn't want a particular service in a package, does the price change? Can you clarify that?
Yeah, it sure does. It changes for everything they want or don't want. So we start off with, when we present to the client, we actually have a calculator that we actually pop right on the screen, and we're sharing the screen with them so they can actually visually see it. And then they pick, and they'll pick and say, hey, yeah, we want the credit card reconciliations, and then the fee changes. We want payroll administration fee changes, sales tax administration fee changes, and so they can see up and down on what changes. Because again, not every client's the same, and some people have a really great accountant on staff that they want to do their back end stuff, but maybe they want somebody to oversee the bank reconciliations, or something like that. And so again, the fee changes, dramatically based on what they do want and don't want.
And a comment I would make about that process being so transparent really helps with the trust. So just yesterday, I had a client ask me, hey, if I wanted to have you start doing my payroll, how much would it cost? So I just go into the quote sheet and say, here's the cost, but he's already seen that piece. And so he doesn't feel like, hey, here's some negotiation where Tom's going to try to get as much money out of me as possible. I just say, hey, here's what it would cost, and then he can make that decision on that. We've got a couple questions about annual increases. Mm-hmm. Inflation changes. Do you want to comment on how prices change over time?
Yeah, there's a few things. Actually, Adam and I are going through price changes here in the next month to make them effective January. But what we do is we naturally scale the price based on how their growth or decline in growth. It could go both ways in that regard. So we have the two different levels. We have the level, the scaling based on revenue, and then scaling based on employee size. So we do that once a year. We look at that, and then the price just automatically changes and adjusts towards that price. With inflation, we try to bring the bottom up, and so we'll be looking at that again this year and kind of looking at our profitability. Because we want our profitability per client to be around 75% profitable. And what that means, if you take in utilization and everything, that means that your CFO package should be no less than 50%, have a 50% gross profit overall. And so the key there is, we want to make sure that we are in that stage. So we're looking at the profitability per client. And for those clients that we're making over 75%, we're trying to figure out, well, we don't really want to increase their fee a whole lot because we're already making a fair amount for, fair share for that. But for the clients that maybe we're only making 50%, what are we doing wrong, or where can we adjust pricing so that, across the board, so that everybody's impacted a little bit more? Maybe we're underpricing our bill paying. Maybe we're losing when we actually go back and do our analysis on bill pay. We'll take a look at that, and then we'll make adjustments and then present that to the client through the calculator, on an annual basis there. So, that's done annually. Great question, Tom. and we adjust again based on revenue and employee size.
Perfect. Sorry, I interrupted you before you're going on to the engagement letter.
No worries. So kind of looking at the engagement letter and statement of work, we've been with them for an hour. It usually takes between, sometimes we get, I'd say about 25% of our clients will say, hey, let's do this one and let's go ahead and go with it. It happens quite frequently. It's kind of amazing on a $60,000 deal that you can get somebody to sign up right then, but that does happen about, I'd say 20-25% of the time. After that, it takes maybe a week to 2 weeks on average for a client to go through all the numbers, check all the boxes, make sure that, hey, this is what they want. They get back with us and they say, hey, let's go ahead and go with it. And so at that point, we send out an engagement letter that we already got, basically a canned engagement letter, but a very specific SOW. And it's important, again, to be very transparent. And so we list every service that we offer and every service that we discuss and don't offer. And then we include it in there. Say, hey, not included. Payroll administration didn't want that, not included. But if you did include it, here's what it would entail. Tax planning, administration, everything very clearly so the client knows that, hey, this is what I signed up for. This is the service I signed up for, and they're happy with it. And again, we send that out. It should take no more than maybe 15 minutes to put your engagement letter and get it back to the client. And that's what it does. We've got it streamlined, so it's very quick. We use PandaDocs in order to do that, along with a CPA charge to get them signed up on their fees. So again, we get that started right away there. With that, once the engagement is accepted, engagement begins again. It's about a 2-week period, so it's not a very long period. We try to get them started. We try to basically give them about a week to 2 weeks top leadway, so we can get the crew together, the team together there, get them ready to go, and off and running. So you're looking at 2 weeks from signing, from basically our meeting to signing, and then maybe 1 to 2 weeks after that to where the engagement letter or the engagement actually begins.
Sounds great. Last question before we move on, Jody. Amy's asking about sharing the pricing spreadsheet. I think I'm correct that on our website is an example of what the pricing spreadsheet looks like. Is that right?
Yeah, it should be on our website. Yep, it should be on our website. Yep. We actually, that's a giveaway they have for the course we put together. It's actually part of the course too. So by signing up for the course, they can get that. Yep, for sure.
Yep. So Amy, you can see what it looks like from the client's perspective on our website, and then we have another course we'll talk about in just a minute. Okay. So Adam talked about what the VCFO services look like. Jody talked a lot about the niche and the sales process. So I'm going to talk a little bit about the people. So you're going to get these people, they're going to start adding, you're going to get clients, and you're going to need to add people to provide the service. So we have seek out the needle in a haystack. It's a unique skill, and it's the main people that you're having in front of the client. So you want to have really good people doing that. So a couple points about this. If you don't have a strong hiring process, this is a great time to get one in place. And then beyond hiring, getting to an onboarding process and retention of people. A couple things around the hiring. We think that hiring related to culture and what the people bring in soft skills is really important. We've done some assessment testing for individual candidates and say, what's the profile of the person who's the most successful in the role? One of the ones we use is emotional intelligence. And that's a pretty big factor that we're using. Would they fit within our culture, and how do we think they would behave in front of clients? And would this be a successful person? Having those tried and true is really valuable to do. Onboarding is something that we spread out across multiple people, and making sure that someone comes up to speed and is successful quickly and has an internal network of people they can rely on is really important. And then really focus on the people and the coaching to continue that. So a couple key things that I would have in here is, one, especially around hiring, don't be afraid to invest in hiring. It's a really important skill. We all know that it's really expensive when people leave, and the churn and the difficulty with clients. So getting the right people in that place is really important. And then also on that onboarding process to make sure that people come up and you can retain them in there. Okay, so I'll talk on process. Oh, sorry, go ahead.
On people, I would say it's really important to make sure the right people are on the bus. You heard the Jim Collins thing, good to great. Yep. But make sure that you get them in the right seats. And if they're not in the right seats, get them off the bus as quickly as possible. And we do have when we bring on new employees, they have a 90-day probationary period. And we're true to the 90-day probationary period. We give them a very fair shot. We actually do a 360 review every 2 weeks with them, all the way through to the 90 days with their, basically it's a 360 with their, with their peers and their team members above and below them. So we've got a really solid thing in which we actually go through and start, stop, and continue. Here's what you need to start doing, stop doing, continue doing, and we're continually repeating. Hey, here's how you can be successful with our company. Here's what you need to do to be successful. And they're hearing it not from me above, that type of thing, but they're hearing it from their team members. And that's really important as we go through, because it's going to really help them and shape them toward the expectations that we have throughout. And then at the 90 days, if they're not getting it, they pretty much know at that point, and they'll either self-select out or we'll move on. You move on from them. Even though we do that, we still get about a 20% year over year. Fall off a little bit on clients, which is really similar to what the ACPA has as their 17 to 18% client churn rate. Or not client churn rate, but employee churn rate.
Yeah, that's a great point. I'm going to go ahead and launch our second polling question, but then I am going to continue on. So you should see that up on the screen and talk a little bit about process. And so having strong processes, and you'll see the slide here in just a second, is really important to have in place. So think about having multiple clients. You want to provide the services that you're seeing on the screen, saying which ones do you provide. And if you're Adam and Jody watching over the firm, you want to know that that's being consistent and then it's meeting clients' needs, and it's not just each CFO and team members figuring out on their own how to do it. So having that consistency is important. The accountant playing a really significant role in understanding that, explaining it to the clients. We have many conversations with clients where they'll say, here's how we do it currently. And I can't tell you the number of times I've said, well, if you would trust our process, we'll give this a shot. We'll go for a while and explain this to you. And usually they're settling in saying, yep, this works really well. Not that it can't be tailored a little bit, but we're saying, here's what we found works very well. Things that I'm talking about are things like month-end journal entries, financial statement variances, non-financial, the way we review those things, the way we review things like pipeline is what I'm describing for that. Doing things with the client, how that's done, and then some of the tools that we're using in there. So kind of looking through all that stuff. How's the process done? Who does it? What processes are we describing? What tools do we use in place? All of that stuff is really important for when we talk about processes. Okay, let me close that poll question. And what we're finding, I actually want to share this result really quickly. So it looks like 2/3 of the people do financial statement review. That's not surprising. About half the people do cash flow, and about 40% do forecasting. So all things that could be provided within CFO services that people should be doing. Only 9% of the people are saying they do pipeline kinds of things that we have. Okay,
that's actually improving.
Yeah, that's good. All right, so if we go on, Adam, I think we're talking about now, how do we deliver these CFO services?
Yeah, probably the biggest thing whenever we think about delivering VCFO services, of course, it's, what do we talk about and, what are the deliverables and all those kind of things. But I think one of our early learning lumps and things that we've had to reinvent the wheel on probably the most is onboarding. This is probably the most mission critical time in the client relationship. This is whenever you're forging relationships. This is whenever you're kind of building trust with the client. And we've found that if we don't get this right in the first month or two, that's usually, it's almost you can't really repair that relationship at that point. I mean, it really has to be good out of the gate. So we put a lot of resources and a lot of thought into our onboarding process. And that is 100% intentional. So, typically an onboarding process, of course, is going to start off with a kickoff call. So it's just a meet and greet. This is where we're telling the client, hey, these are going to be all the different faces that you're going to see on our side. This is when you would come to me. This is when you would go to this person, that kind of a thing. And then on the other side of the table, we're asking the client the exact same thing, like, who are we going to go to with these questions? So they're introducing different players. This is also an opportunity to get sticky with the team, because if it's just one person versus having 2 or 3 other people. So it's a really nice kind of get to know each other. But then we're going to cover that SOW that Jody was talking about, all those things that we said we do, and more importantly, that we don't do. So we're actually putting those don't do things right on the, this is the only time whenever we're really doing a PowerPoint, have it right on the client, so they can see, hey, you're responsible for this. This is what we're responsible for. So establishing, what the expectations are in terms of the work. And then probably most importantly is establishing the communication lines. hey, this is when we're going to communicate with one another. This is how we're going to communicate to one another. And we have dedicated specific meetings for things. This is how you kind of avoid that scope creep, because as Jody mentioned in the VCFO service, it is an unlimited service. And so what we don't want is every time something jumps into their head, we're having this call or fielding this email or this Slack message. So that's why we're really clear about this is how we communicate the most effective with one another, and this is how it's going to work going forward. So making sure that they understand how that's going to happen. And then we kind of wrap with, their feedback is extremely important to us. So similar to, whenever Tom was talking about, how we work with our people, and then we have those 90-day, feedback loops where we're doing kind of start, stop, and continue. We do a similar kind of a thing, a lot less touch, but we're doing it on a weekly basis with our clients. We send them a tool called Customer Thermometer. It's just a yellow, red, or green, tell us how we're doing. And if we hear that it's yellow or red, things aren't going as well as they should be, that's whenever our accounting director, who's the account manager on the account's going to work with the client directly and say, hey, how can things get smoother? But I think that one of the most important things after you get done with that kickoff call, we have, again, a very specific process where we're going to go through and document all their procedures, whether we're doing them or not, all those kind of things. The most important thing of onboarding, though, is painting what done looks like to the client. Mm-hmm. Because we kick it off and we get to work. I mean, we got 3 or 4 people doing all these different things, but we're doing them virtually, so the client doesn't really see that stuff. But we're also, they're just like, they wanted this one thing, which was maybe the financial forecast, but their books are garbage, and it's going to take a while to get caught up. Plus, we're trying to figure out who they are and all those other kind of things. So we have a timeline that we show the client, and we say, hey, when we get done at the end of this time frame, this is what your financials are going to look like. This is what your forecast is going to look like. And they're like, okay, cool. I see what I'm working towards, instead of just kind of answering all these, sporadic questions and having all these random meetings. So that was an important lesson that we learned. And then once you get out of onboarding, as I discussed earlier, it's important to, not just for scope creep reasons, but just for organizational efficiency. Both internally and for just clarity to the client. What we've done is we found that it's important to set up very standard meetings. Now, they're not extremely rigid. We might find, take the EOS approach to the structure of the meeting. But what we found to be the most important thing is to name the meeting. So Jody will walk through, some of the pieces of our cash flow meeting and forecasting and things of that nature. But the most important thing you can do is name the meeting. That's going to give the client clarity on who should be there. So for instance, the pipeline meeting, well, the salesperson should probably be there, that kind of a thing. And so a cash flow meeting that's about the ins and outs, maybe, the visionary partner doesn't want to be a part of that. That's not where they go. So by naming those meetings, it gives them a lot of clarity into who should be there and what's going to be discussed. And then from there, you can kind of create a rough outline, an agenda, what's the walkaway going to be? And that's probably the most important thing. Hey, we're going to make sure we touch base on, doesn't mean we won't discuss other things, but we're always going to walk away with an understanding of A, B, and C. Keep it simple, leave some flexibility, and then of course set the cadence. So for many of these meetings, some of them are happening weekly, but some of them just are on a rotation, like the financial performance meeting. We're not having that meeting every single month or every single week. The forecasting meeting, we're not having that typically every single week, although whenever things are in flux, we might have to. But those are things that we can just kind of put into our arsenal and make sure that they're getting touched upon once a month, so the holistic approach is there, and the client knows, oh, I'm going to hold on to that question, or I know in the 3rd week we cover pipeline, in the 2nd week we cover forecasting, and they know these things and they can anticipate the delivery. So that was important to our delivery.
So Jody, you want to talk about financial performance? And if you don't mind, I'm going to go ahead and launch the last polling question while you cover these.
Yeah, sure. When we talk about financial performance, again, it's more of a consulting versus reporting type of an arrangement. We want to make sure that we have solid KPIs where they can actually see how they're doing in the different areas. The client needs to be educated on how to read those KPIs, what those KPIs should be against a forecast, maybe against an industry standard, that type of thing. So they know how to actually, basically influence that. So it's really important that we have that broken out. And as Adam mentioned, we have, a cash flow. Cash flow is important. So we talk about, hey, you need to have at least 10% of your annualized revenue in the bank at all times. So we give that client that end goal. Or during the onboarding, maybe we've determined that the client wants to sell a business in 2 years. And so here's what the value of that business needs to be in that 2-year period. So again, maybe that's one of the KPIs we're looking at. But so and how much cash we need to actually build in order for that to happen. So cash is a really important one. We have both a short-term and long-term cash plan where we actually meet with the client on a weekly basis on every Monday for maybe 20-30 minutes. If they pick cash flow forecasting, or if we're paying their bills or doing their invoicing, we meet with them once a week just to simply go through and get approval during that meeting. Again, that's that short-term version. The long-term version is more of a long-term area. So we're looking at, hey, that 10% goal. So money in the bank, really important. That's the number one metric. Production metric, we have to identify what those are. That can be from vehicles going through, that could be patients, that could be for a service-based company, that could be hours and employees, utilization, average bill rate, that sort of thing. So we have to identify what that production metrics are and how that's going to really impact that forecast. The financial metrics, it's important to understand, and you can go through many different sources to get it, but what does industry look like? The industry is not the all-in, because we really don't care what the industry looks like, but we want to make sure we're not off base. And I say we don't care because we're looking at what we forecasted out, and here's what we have to do as a company, more so than what everybody around us is doing, because we don't want to be average. We want to be better than the industry average. But it's important to know what those are, so you have a general idea as a consultant to kind of go through that. And then with the pipeline, again, the fourth one, again, we have meetings based around this, and these are part of the discussions during the presentations. But the pipeline is, for that to have, if you have a salesperson, what do you have in the pipeline? What do you typically have in the pipeline, and what's normally in the pipeline? Basically you go through different, contract or revenue, contract, basically you're looking at the different things in the pipeline, because what you have to do is these kind of all go back and forth to where if you have a solid forecast put into place, if the pipeline is not there, well, then you need to make some adjustments. And so that's why pipeline is so important, because you want to be giving bad advice to a client. So really important, as we mentioned, short-term, long-term. Our first engagements was the short-term cash flow meetings, and then eventually went to a monthly look on the reviews on the long-term side. We use a product called Cash Flow Tools for our short-term engagements, our short-term cash flow meetings. Works really well, brings everything in from QBO right into the software. Not a lot of prep time, but then again, that's a delivery that one of our senior accountants can deliver to the client, as our CFO. So again, another touch for the client, which makes it really nice.
So forecasting is really one thing that differentiates the true CFO service from the controllership service. And you can see an awful lot of words on here, but this really gets to the conversation with the client about where do we think things are going and what decisions do we make around that. Adam gave several really good examples of getting it into sort of the words of the customer. How many more patients, widgets, whatever you need to do versus, hey, we need more sales or we need to cut expenses, something like that. It's a very frequent occurrence that the client will say something to us around, I'm thinking about adding a person here. What do you think about that? And the first thing the good CFOs do is open up the forecast and say, well, let's go ahead and put it in. Here's what it's going to look like. Is that a revenue producing person? How much do they cost? What are you thinking around this and that? And they can just see the result from that. So many things I've gone to from a CPE and direction setting standpoint is saying, hey, for accounting, people don't want you to spend your whole time telling them what happened. Where are you going? That's exactly where the forecast piece is putting us. And so this is a place where we do an awful lot here. Plan Guru is the main tool that we're using with our forecasting, and it's something that we actually show to the client, and you're opening up in front of them and doing that work with them, so they're helping us in doing that forecasting.
Yeah, and I would say a big part of this is the balance sheet forecasting is one of the bigger parts. So again, it's important to be able to, if you're using a forecasting tool, make sure that you're not just talking revenue or taxes with them, you're talking on the balance sheet. Hey, when's my line of credit going to be utilized? If at all, what's my loans going to look like throughout the year? What's cash going to look like? Those are really important discussions, because just the timing in AR, if I go from a 60-day to 45-day AR, how does that really impact cash? They may be able to build that cash reserve without selling another dime, just by changing or modifying the terms of their engagements there. So again, the balance sheet is really important. So make sure when you're picking a tool out for forecasting, the balance sheet's dialed right into it.
Yeah, and if you are big into tax planning and tax preparation, this is also a great opportunity to do a soft tax planner monthly and show them the impact on their cash. So you can bake that right into your forecast and can be an additional add-on to what you're already doing.
Yeah, that's a great point. I started getting just a little tight on time. We've mentioned the pipeline a couple different times. This is usually a once per month process that we do with people looking at what's coming from a sales perspective. And so, and this is one of the best chances for clients who don't usually have a continual review of just how much am I going to need and is my pipeline going to help me support that, where you can have conversations with them and also look at some things like if you can shorten your sales cycle, if you can shorten your project times, what can we do on these particular projects where they really have a good analytical view at their pipeline itself. So recap, and Jody, you want to give us a kind of 30-second what you think are the biggest takeaways from today that you'd like people to walk away with?
Yeah, on the marketing and sales side, I'd say the marketing side, start looking to brand your business and get away from branding your partners, because again, you don't want the partners doing the work. You want the CFOs. You want people below you to actually start doing it. So it's important to get people to start coming to you, and that's through thought leadership, which I would say would be the biggest thing. You don't have to be an author to be a thought leader. You can actually, there's a lot of different things you can do, but don't be afraid to spend some money into the marketing side of your business. We spend about 7% of our annualized revenue in marketing year after year, and it definitely gives high results. So again, really important to spend some money there and to really kind of help you brand your company. I'd say it's probably the number one takeaway that I could give. Adam, how about you?
Yeah, I mean, and don't undervalue or underestimate the ability of putting those service packages together. So spend a lot of time thinking through that. I mean, that is one of our biggest selling points, is we can position somebody in that 1 hour call, not only using our pricing guide, but also the package, so that we can kind of align them quickly and understand where to put people. So I think that goes hand in hand with the niche. If you figure out who you're going to be serving, make sure that you understand what services you're going to provide, what services you don't want to provide, and bucket them in a logical way, like a light, medium, and a heavy version, so that you can easily, articulate how much it's going to cost right there on the fly. Clients really love that.
Yeah, I think that's an excellent point. And I didn't show the results of the last polling question, but I'm looking at them now. 51% of the people, and that was the top one, said their biggest challenge to starting the service is developing the processes and tools. And Adam, I think what you talked about is, hey, which packages is it? And then developing the processes. And I would guess you guys would agree that, we didn't have processes perfect before we started doing it. You can say, I can do these things and develop them and say, standardize them as you do. The second biggest one was just getting started. And that would be probably where people need a bit of a push of saying, it's probably scary to go into something new, but you've got to jump in and go ahead and give this a shot and try this.
Don't try to be perfect, because you'll never get there. Just go ahead and get started and learn as you go.
Yeah.
You will bring so much benefit to the client. You'll have no idea until you actually start presenting to them.
I think that's a great point. So a couple things before we close out. So we're encouraging people to continue learning. So the Modern CPA Success Show is a podcast that people can listen to, has some really good topics where we drill in on some of the things we talked about today and some other things. The CFO community, we've got more than 100 people who are participating in the Slack community. And I pay a lot of attention to this, and we've got a lot of questions that are going in that people are asking and exchanging information about how to do work. And we're promoting the webinars in here, but a lot of people, there's a book club in there. There's a group that meets to focus on marketing skills and marketing talent. And so that's something we would really encourage people to do. We are offering a course, the Virtual CFO Playbook. The $60,000 per year client, you've seen some of our numbers, that those are numbers that we're able to do. This is a 15-module course that really takes someone through the exercises of launching a CFO service. And so we'll have different points you're saying, okay, stop and do this. Adam mentioned actually really being clear about what service you're going to provide. That's one of the exercises, getting more honed on what different types of services and what would those packages look like, as an example. So that's something that people can enroll in now. As Jody mentioned, someone asked about the pricing spreadsheet. That's something that people get if they take the class to do that. So here's something that we're really encouraging people, if you're serious about this, this is a great way to launch into the virtual CFO services.
Yeah, and I'd say probably one of the big benefits there is that weekly fireside chat, where you get a chance to chat with Adam, for an hour as a group, and just kind of go through and answer questions. How do you do this, or what do you do this? Or it's a really nice sounding board. And we usually have 15 plus clients on the call, people that have gone through the course or in the process of going through the course, asking those same questions that everybody else has. And so it makes it nice and real informative.
Yeah, thank you. I forgot to mention that. And also I had talked about the CFO community and we talked about the book. Those are also included if people take the course. So last, thank you to our two speakers. If you would like to talk to either Adam or Jody, you've got a link when the presentation comes out. That link will be active. And so you can schedule a consultation and learn more about what we do. And then also we put in the Summit CPA website address that people have. Jody, Adam, thanks for your time today. And for everyone participating, thank you. And we had some great questions come in and some really good interaction. So I think it went really well.
Yeah, thank you.
Thanks, everybody.
Thank you, guys.